What is ATED? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. What is ATED? Well, ATED is the annual tax on envelope dwellings. You may go, what the hell is that? Well, let's go into a little detail today and find out exactly where ATED fits in, whether it may apply to you or whether you fall within one of the exemptions, so that you can just be aware of this slightly odd tax that's out there, which is in essence been designed to stop individuals putting properties into companies to protect, avoid or do different things that they maybe or shouldn't be doing. So ATED is a tax charge that is payable on UK residential properties that are over 500,000 in value that are owned by a company. You'll need to complete an ATED form if your property is a dwelling, it's in the UK, it's a residential property that is valued at over £500,000 and it's owned by a company, a partnership or a collective investment scheme. Now the returns themselves need to be filed after the 1st of April each year, and there is set taxes that are payable, which we'll go into in a minute. There are also some reliefs and exemptions you'll be pleased to know, and we'll go into great detail in them so that you can just ascertain that you hopefully fall within an exemption if there are used property, or if not, what you need to be doing to make sure you are obviously above the law. So let's start with what the meaning of dwelling is in this circumstance, because in every area of tax law there are different definitions for different things. So let's just assess what dwelling means at this point in time. So a dwelling is a property that can be used as a residence, or part or most of the property can be used as a residence. So this might be a house or a flat, and it includes gardens, garages, outbuildings, all those sorts of areas as well. So some properties that aren't classified as a dwelling would be things like a hotel, a hospital, guest houses, boarding school accommodation, student halls, military accommodation, care homes and prisons. So hopefully those ones are obviously not dwellings, although they are used for residential purposes. But generally, if you've got a house or a flat, this would be seen as a residence and would be treated as a dwelling for these purposes. Obviously, in the beginning, we also gave you a value. So any property that is valued over 500,000 falls within the regime. Now, rather than have to revalue the properties regularly, they've actually set a valuation date every 5 years since 2012. So we had a revaluation year in 2017, 2022, 2027 is the next revaluation year. So at these points, we need to have a valuation of the property and what the value is at that date. And that is the value that the property is treated to see which tier of the ATED taxes that you are paying. The tax that you have to pay is based on a figure depending on the value that you come to. So if your property is valued between 500,000 and £1 million, the annual charge will be 4,400. Anything between 1 million and 2 million will be charged at 9,000. And these are just flat rate tax charges. They're not values, they're not percentages, they are just set amounts that you have to be paying. The process of submitting an ATED return is all done through the ATED online system, and like any of the HMRC taxes, you need to register online for completing it, and then you follow the process online to submit the value of the property and submit the details of what you need to be completing. Click submit, and then it will give you the reference to enable you to make the payment of the tax that is due. This all needs to be completed by the 30th of April each year, having just finished an annual period up to the 31st of March each year. Moving on to the implications of what happens if you don't. Well, as with any tax, that if you don't pay the return on time, if you don't submit the return on time, there are potentially penalties in place if you should be fulfilling your duties to file a return and to make payment of the tax from that return. And finally, also if you submit an inaccurate tax return as well. So if you value the property incorrectly, then again, if you're paying less tax than you're meant to be paying, again, this is cause where you may get penalties. Hopefully the ATED system is a relatively straightforward-ish approach. When you know the value, the tax calculation or the tax charge is relatively easy to get to. So on that basis, hopefully it's a relatively straightforward process in doing the return to make sure you're getting it right. The only thing we now need to probably cover is what are the exemptions. So when do you not need to do this to ensure that you're not within this regime, or if you are, just make sure you're aware. So the reliefs and exemptions that are in place may either reduce the ATED that you need to be paying, or it will remove you from the need to complete the ATED return at all. So you may be able to claim relief if the property is let out on a commercial basis and is not at any time occupied by anyone connected with the owner. So this is your atypical buy-to-let, HMO. So on that basis, this is basically saying that if you're renting out as a buy-to-let, if you're renting out as a HMO, all of these would exempt you from the ATED as you're using it as a proper property for rental purposes rather than just holding an investment property in a company and not doing anything with it. Care needs to probably be taken at this point if you have got properties that are sitting empty for a longer period of time before they're rented, or if you've got gaps in the rental period, that may need to just be care taken to ensure that it doesn't fall into the ATED regime if you're not at least attempting to rent the property. It must be open to the public for at least 28 days. So again, this is just saying it's available for let. If it's being developed by a property developer for resale, again, this is another option. So if you've bought something to flip a project, then again, this would fall as an exemption to the ATED regime. It's a working asset rather than being held in a company just to hold the property. If it's owned in the company as stock for a property trader, so you've bought it, you're not doing anything with it, but you're a property trader, so you're going to sell it and that's your business, then again, you would potentially fall within the exemption. Properties that have been repossessed by a financial institution are exempt from the ATED taxes. If it's been acquired by a regulated home reversion plan, it's being used by a trading business to provide living accommodation for qualifying employees, a farmhouse occupied by farm workers or a long-standing farm worker, or owned by a registered provider of social housing or a qualifying housing operative. So as you can see, hopefully this takes a lot of us out of this ATED regime, but it is something just to be aware of in case you are buying a property in a company and have no intention of doing anything with it apart from owning it within a company. There is also some exemptions available and reliefs available for the Homes for Ukraine sponsorship scheme, but check those out online if any of your properties fall into that scheme. If you are claiming reliefs, then it may be you don't have to do a return at all, or it may be you need to do a return but claim relief on the floor. So let's finish off with a few final exemptions just so that you've got the full picture. So a few final exemptions include a charity using a property for charitable purposes, public bodies that are listed in one of the specific areas of the legislation, and bodies established for national purposes. So these tend to be the bigger government sort of agencies or charitable companies that are doing things for charitable purposes. So as you can see, the key exemptions there are a bit more probably bigger than most of my audience is going to be dealing with things, but the reliefs are definitely things that we just need to be aware of to make sure that we have covered our bases. As you can see, ATED is one of those areas that potentially as a property trader or as an investment property and rental sort of business, you probably don't fall into it. However, it's just something to be aware of in case you are buying any properties in a company that are just sitting there, that you're not looking at trading, that you're not looking at developing, that you just wanted to protect the property, you wanted that property, and potentially it may just apply to the odd occasion. But again, just something to be aware of in the back of your mind so that you have a good awareness of where things fit in the property world with these sorts of strange taxes that have been introduced. Hopefully today you've discovered what the ATED tax is all about, whether it applies to you or whether it's something you don't need to be worrying about. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.